Hi everyone, my name is Alisha Kapur. Really excited to have you on the webinar. Today is the 2021 Grocery and CPG Showdown. So we'll be going into insights around the grocery space, diving into Amazon, and really understanding how CPG brands can win, especially in this new landscape. So I'll be co-presenting with Ines. We'll introduce ourselves momentarily. As I mentioned earlier, we will be doing a Q&A section at the end. So if you have any questions, you can put them through the Q&A function in Zoom, and we'll answer them in the 10 minutes we have at the end. So like I said, Ines and I will be presenting today. My name is Alisha Kapur. I am a senior industry manager at Similarweb. I've been with the company for about 2 years, and I am a thought leader for the food and grocery vertical, but I also support travel and a few other verticals in retail and CPG as well. In my role, I work with a lot of different teams. I work with global clients to help them understand and grow their strategy online. And then I also put out thought leadership through our marketing and PR teams. And my work has been featured in a few different publications, most notably CNBC, The Washington Post, and USA Today, among other media outlets.
My turn then. Thanks, Alisha. Hi everyone. My name is Ines Durand. As you may notice, I'm French, so sorry in advance for the accents. I'm an industry manager for the beauty and personal care category, also supporting other industries in my home market, France. I have previous experience in strategy and M&A in financial services industry, and I'm helping large beauty and personal care organizations to win their digital market online.
Awesome. Thank you, Ines. Great. So for today's agenda, like I said, we'll be starting off with the grocery retailer landscape, really understanding how things have changed during the pandemic and what's happening right now and what our forecasts look like for holiday, for next year, especially as we're starting to see supply chain issues really across the whole CPG industry. Then we'll dive into Amazon specifically, and most of those insights will be from our shopper intelligence tool, which focuses on the Amazon marketplace and will soon include data for other retailers as well. So like I said, starting off with grocery, then diving into beauty and personal care, and understanding how the landscape has changed and what opportunities there are for brands at the moment. So let's jump into the grocery retailer landscape. Awesome. So when we're looking at the grocery retailer landscape, we can skip to the next slide. What we see is that the big are really getting bigger. So Amazon, most notably, owns about 1/3 of all traffic to top grocery and food delivery sites. So this includes Walmart Grocery, DoorDash, which is the largest food delivery player in the United States, Instacart, Kroger, Publix, etc. What's really interesting here is that even though all of these sites had significant growth since 2019 as consumers moved online during the pandemic, really the gap between Amazon and Walmart Grocery, the next largest player, is much larger than the gap between Walmart and DoorDash. And this is really mostly looking at desktop traffic. So really we're seeing that DoorDash is actually getting a lot of acquisition on desktop, not just app, as most food delivery players do. So kind of an interesting sub-story here, but really what we want to focus on is just Amazon's dominance in the space. Now, if we go to the next slide, what you'll see is that Amazon isn't just winning the top of the funnel, it's also winning the bottom of the funnel. So Amazon did have the highest jump in conversion rate since 2019. That was about a 16 percentage point jump. And grocery is not the only category that Amazon has become significantly more efficient in. Ines will speak to this later, but we're seeing that across many, many categories, especially ones that have just increased consumer acquisition online over the past 2 years. And what we see is that because of this increase at the bottom of the funnel, we see that Amazon now owns about 40% of desktop grocery and food delivery conversions. And you can really see on the right here just how far they diverge from the rest of the pack, again, with the exception of DoorDash, which actually has the highest conversion rate of any player here. So DoorDash, we can see, has really been doing surprisingly well on desktop and is actually outpacing Walmart grocery here for converted visits. So really that conversion efficiency is helping DoorDash win as well as Amazon grocery. If we jump to the next slide, what we see is that when we look at Amazon and two of its top competitors, Walmart and Target, the overlap between Amazon and Walmart and Target is much higher than vice versa. So on average, about 30% of Walmart and Target food shoppers also go to Amazon grocery and gourmet. It's a hefty chunk of people. It's almost a third of the consumer base that is also going to Amazon. When we look on the flip side, what we see is that the highest share of cross shoppers going from Amazon to Walmart or Amazon to Target really happens with the Walmart food category over here, where we see that about 5% of Amazon shoppers are going to Walmart. So a much lower percentage of customers that are going from Walmart to Amazon. And what this really symbolizes is that Amazon is really good at keeping people in their ecosystem. And that's for a variety of different reasons. We'll speak to Subscribe and Save later. Obviously, Prime memberships are a huge lever for them. But once people are on Amazon, they're pretty reticent to leave. So if you are a brand who's trying to figure out where to best expand your grocery strategy, Amazon is probably the first place you want to look. For some additional context here as well, Amazon's share of brands on grocery is actually relatively low. So the marketplace is pretty large in terms of other grocery brands, and we'll look at top growing grocery brands in the next section. But the actual percentage of brands that Amazon itself owns, so brands like Whole Foods, Happy Cow, et cetera, is really only about 20% of brands or 20% of unit sales. And it hasn't actually increased significantly over the past few years. So there's a ton of opportunity on Amazon if you're not already selling there, or if you are and you're just trying to increase sales. We'll get into the nitty gritty of that in the next section. So let's jump into our Amazon deep dive. And we'll start off by just looking at what the top growing subcategories were for Amazon grocery since 2019. We can go to the next slide. So what we see is that the categories that grew the most since 2019 were mostly fresh food categories. So categories like produce, dairy, cheese, and eggs, breads and bakery, et cetera. They had a growth of about 832% since 2019. The reason we saw such high growth for those categories was that they were actually some of the lowest performing categories in 2019. So kind of pre-pandemic, I'm sure a lot of you can empathize with this. Consumers were pretty reticent to buy groceries online, especially fresh food, because a lot of consumers had the mindset that whoever was shopping for them wouldn't be able to pick out the right produce or the produce they wanted. So consumers preferred to go in store. And I know I was someone who was like that. I didn't want anyone buying my bananas because I wanted to buy the best bunch at the grocery store. Now, as people have increasingly gone online and are hesitant to go into stores or don't want to be in stores for too long, what we see is that they're actually very comfortable buying fresh food online. And produce really only has about 5% less unit sales than the top selling category here, which is pantry staples, which obviously has shelf stable foods. So I think this really speaks to the overwhelming stickiness and staying power of online grocery and Amazon especially, and how it's really kind of just how consumer habits have changed as a result of the pandemic, and how people are much more comfortable buying online, especially items that they may have not been comfortable buying online previously. We'll jump into the next section. One thing that is really especially important for Amazon grocery is the loyalty piece. And what we see is that Amazon has really high loyalty. So about 3/4 of purchases are from returning purchasers or people who have purchased in the last 6 months, when we actually look at that prior purchase timing, about 39% of returning purchasers are coming within 30 days or coming back within 30 days. So you can tell that people are really using Amazon for their monthly, bi-weekly, weekly grocery shopping trips. And the consumers that are most high value to Amazon's are those with 5+ transactions. So on the right here, you can see that consumers with 5+ transactions make up the smallest share of customers. So only about 15% of customers, but they're making up 60% of Amazon's revenue. So once you have a consumer really kind of in the Amazon grocery cycle, they're going to spend more and they're going to be higher value. And that is what Amazon is really, really betting on for a return on investment. We'll speak to some levers that can improve loyalty, but keep this in mind because you really want to be focusing on that returning purchaser cohort when you are targeting or when you are advertising on Amazon. So one lever, and we'll go to the next slide, but one lever that really kind of has improved retention for Amazon and that Amazon has been pushing a lot is subscribe and save. So subscribe and save makes up nearly 1/3 of all grocery purchases. Its share has actually grown over the past few months or the past year or so. It is pretty steady growth, nothing too crazy, but we have seen that Amazon has actually been pushing its own subscribe and save deals for suppliers to improve retention or to improve the acquisition for subscribe and save consumers. So if you're a brand and you have the option to do subscribe and save, especially during the holidays, we're seeing a lot of deals around subscribe and save, around increased discounting. This may be a place where you want to actually focus your discounting or your pricing strategy to improve retention in grocery. Now on the next slide here, we're going to just jump into the brands that actually grew the fastest since Q2. So this was Q3 versus Q2. And you can see the list of brands on the left here. We see that they're all shelf-stable brands. Sea Point Farms, the top one, is mostly canned or frozen vegetables. Liquid Death is canned water. And then we actually had some really interesting brands here. Mrs. Wages, Yo Gourmet, and The Sausage Maker are all brands where consumers can can their own items, case their own sausage, or actually make their own yogurt. So we're seeing almost a trend towards self-sustainability in grocery, as well as bulk buying of pandemic essentials and of shelf-stable items. So what we see with these brands is that as they increase in consumer demand for various reasons, with shelf-stable items, a lot of it is panic buying, similar to what we saw at the beginning of the pandemic. The average listing price for their assortments actually increased. So I would say this is a pretty good indicator of the inflation we're seeing, along with increased consumer demand for pantry staples. And we saw an average price hike of about 97%, with the highest price hikes going to Keystone Meats, Mrs. Wages, and Rip Van Waffles. Now, if we go to the next slide, we can actually jump into pantry staples and some of those brands and understand kind of what inflation looks like for the whole shelf stable category on Amazon. So let's jump into pantry staples. What we see is that 1P and 3P pantry staples unit sales actually grew in tandem, which is interesting because with most categories on Amazon, I would say 1P is the leader in sales, and it is still the leader in sales for pantry staples, but 1P and 3P are very close. However, when we look at the top brands, we see that they mostly sell through 1P. So really, almost all of the top brands, except for Heinz, sell at least 85% of their units through 1P. Now, going to the next slide, something interesting emerges. So we saw on the last slide that Heinz and Barilla had the highest share of 3P sales. What we see is that that's actually a recent trend. So over the past few months, we saw that third-party sales started to gain leverage, especially as we saw out of stocks for staple products. And Barilla and Heinz both have staple products, saw out of stocks, and that drove third-party sales. Now, when these third-party sales started happening, we also saw significant price hikes again. So really demonstrating how supply chain issues, heightened consumer demand is actually impacting price here. And you can see from July through August and September, price went up significantly for both brands. And it's something that I anticipate over the next few months, we will be kind of dealing with these price hikes. Unilever has spoken to this. Other CPG brands have spoken to the fact that they've had to increase prices on some of their shelf stable or necessity products. And I anticipate we'll continue seeing that. If you are in a brand in the space, I think one way to take advantage of this is to really assess your assortment and understand what is the most in demand and see if you need to adjust for inflation in any way to kind of keep up with the rest of the industry. On the next slide, we'll just have one last example of this as well. Maruchan is actually one of the largest grocery brands in general. It's had insane growth over the past 2 years. It is an instant noodle brand. So as consumers initially went into lockdown, they started stockpiling ramen, other kind of pantry staples, and Maruchan saw growth then. But then over the past year, we've seen even more growth. And what we see is that there was a 49% growth in unit sales since May. At the same time, the products that were the most in demand, so high pack products or multi-pack products like the pack of 12, 24, 6, etc., those increased in price, whereas single servings actually decreased in price. So again, we're seeing this consumer behavior shift, whereas people are starting to stockpile again, they want to buy larger pack sizes. And because of that increased demand, because of this heightened need, we are seeing significant price hikes and inflation for these very in-demand products. So that concludes the grocery section. I'm going to hand it over to Ines, who will speak to similar trends that are happening in beauty and personal care, and really how you can optimize for those.
Thank you, Alisha. So before deep diving into the subcategories and brand insights, let's first take a look at beauty retailers' performance over years that will help us to understand how COVID shaped the online beauty industry. Next, please. All right, so here we can see on this chart the total visits per top beauty retailers and converted visits. So we picked Amazon Beauty and personal care subcategory, but also Sephora.com, Ulta.com, and Bath and Beauty Works. And what we can observe here is a stickiness overall of consumer habits. Online shopping in the beauty industry did sustain post-pandemic, and maybe to a lesser extent than when there were still all social distancing measures on. So on desktop, Amazon had the biggest rise of converted visits as between January and September 2021 compared to 2 years ago. So there's been a rise of 106% of converted visits, increasing traffic year over year, and also an increased conversion rate, the trend that we can also observe in the grocery section. So that means that these days, consumers really go on the platform with the intention to make a beauty purchase there, and Amazon is now a beauty player among others. As for Sephora lost traffic compared to 2019 with the biggest drop between 2020 and 2021, but actually managed to convert more visits and increase its conversion rate by 13%. So actually, LVMH, which owns Sephora, during its latest earnings call, confirmed the strong online performance of Sephora over 2021, thanks to an enhanced online shopping experience with the platform offering same-day delivery, similarly to Amazon, or a live chat with beauty advisors that will be launched soon enough and will enable the platform to further increase its conversion rates. Lastly, the important data point here is Ulta.com that has increased its converted visit by 91% over the last 2 years by really focusing on attracting a wide range of customers, especially teens, by making coexisting drugstore with luxury brands, similarly to Amazon nowadays. However, there's been a drop in converted visits and CVR between 2020 and 2021, which makes us believe that Ulta has been affected by the return of in-store shopping and the enhanced shopping experience now that mask mandate has been scrapped. Next slide, please. Thank you. Now, if Q1 and Q2 data showed a strong revenue increase year on year for the beauty subcategory of Amazon, actually Q3 beauty and personal care activity showed a slowdown of Amazon online beauty sales. The overall category was down 4% year on year in revenue and 12% year on year in units sold. And makeup, personal care, and oral care were the only beauty subcategories growing in revenue year on year. As the world reopened, it seemed that customers are doing less self-care at home, driving in lower sales in most subcategories, except for makeup, whose unit sold stayed stable. However, as we saw on the next slide, the revenue growth the revenue growth for the oral care and personal care category was driven by inflation, very similarly to what we've seen in the grocery segments. Looking at the average listing price of the top 5 brands in units sold for both oral care and personal care categories that are convenience products, convenience brands that a lot of people will put in their shopping carts when they go to the supermarket, we saw an increase of revenue of 9% for oral care and 5% for personal care subcategory. That is obviously linked to pricing adjustments. First, deep diving into the personal care category, the average prices of these top 5 brands rose by 25% year on year, with the biggest price increase for the brands Secret and Dove, whose average unit price increased year on year by 43% on average. Secondly, as for the oral care segment, the top 5 brands average prices increased by 27% on average, with the biggest increase in price for Listerine and Oral-B, about 35% each. Next slide, please. So now we've seen the different trends and dynamics that are happening right now in the beauty category of Amazon. Let's deep dive a bit more into the oral care subcategory analysis. So we saw that there was an increase of revenue for the oral care subcategory over Q3 2021. But now let's look on how the pandemic impacted the segment over the last 24 months. So over the course of 2 years, units sold for the oral care subcategory grew by 48%, while revenue grew by 49%. Why? Because studies suggest that work from home has been a driving force for people to do more self-oral care at home, because they felt more self-conscious about their teeth whiteness after seeing them on camera all day. They also had more time to adopt new healthy habits, such as flossing. Lastly, oral care sales were also impacted by the fact that people were scared to go to the dentist and postpone it, as it required physical contact, and they were scared to be infected. So that was probably another driver of this oral care sales in the last 2 years. Lastly, the last interesting data point here is that we can see that the peak of the sales of the last 2 years happened during November 2020, which corresponds to Black Friday, at the highest point, where 9.7 units were sold and $192 million revenue was made. So now we can expect even higher sales this Black Friday, looking at the current sales trend, and especially in the electric toothbrush segment, as Philips Sonicare electric toothbrush was the top selling product of the subcategory during Black Friday. Next slide, please. So what we've seen now is previously we saw that the top 5 brands of the oral care subcategory saw inflation in Q3 2021. But what about the 10 fastest growing brands? So among these 10 fastest growing brands, 7 saw their average price increase year on year by an average of 17%, while 7 actually 3 other brands saw their average price decrease. But what is interesting here is that the 3 fastest growing oral care brands, which are Master Medi, Rich, and Our Raymond, were among the ones that actually saw the smallest change in price year on year compared to 2020. And actually, Our Raymond prices decreased year on year by 8%. What does that mean? Is that these fastest growing brands were really boosted by an increased concern for oral health alongside, of course, of price inflation that did help a bit. But now I just want to focus a bit more on the fastest growing brands, Master Medi, whose revenue increased by over 120% year on year last year. Master Medi offers a tongue cleaner product. It's the first in its category in revenue. And while actually the tongue subcategory, the tongue cleaner subcategory decreased over the same period. Why did that brand increase that much? Because its product accumulates very high reviews and thousands of reviews and is really praised by customers for its efficiency and often picked by top PR publications as one of the best products to buy now on Amazon. So people are really concerned about actually their tongue at the moment and they want their tongue to be as clean as possible to avoid diseases. And actually, according to reports, a recent report of Allied Market Research, the global tongue cleaning market is expected to grow 4% a year from 2021 to 2030. That supports what we're seeing here on the graph. Next slide, please. So now, after this deep dive into the oral subcategory, let's look at the makeup subcategory. Why? Because it was the only subcategory that did not see a decrease in units sold this last quarter. However, the price inflation boosted its 9% revenue growth. As you can see here, all top drugstore and luxury brands saw an average listing price increase between Q3 2020 and Q3 2021, with an average growth rate of 23% year on year among these top 10 brands. The brand that grew the most, the brand that saw its prices soar the most was Julep, with an average increase of almost 44%. Why? Because there's been an increased demand for its eyeshadow, which is a top-selling product in its subcategory. And actually, one of the other interesting facts here is that eyeshadow used to be priced like a drugstore product, and actually saw its units sold soar after the pricing increased. The last thing we'll notice here now is that while average unit price grew by about 22% for drugstore brands, so maybe New York, NYX, L'Oréal Paris, CoverGirl, and Revlon, high-end prices increased the most, averaging a 24% increase in price year on year. Next slide. Why is it interesting? It's because high-end brands were the one that saw their price rise the most, and they're already way more expensive. And we know that Amazon was traditionally not positioned as a luxury makeup retailer. However, even if they're more expensive and the prices are going more, fastest growing brands are actually the priciest. And here we'll see that even if makeup drugstore brands such as maybe New York, NYX, etc., still led sales volume over Q3 as they're originally Amazon's core beauty offering. Only one of these brands, Maybelline New York, figures in the 10th fastest growing makeup brands. And that's Maybelline New York that grew by 17% year on year. And that kind of illustrates the growing interest of the Amazon audience for higher end makeup products. and the potential danger of Amazon towards traditional beauty retailers, but also the opportunity for new makeup brands to gain some more customers on Amazon. Something we also see here is that the three top fastest growing brands year on year were first, so Urban Decay, whose average price is $21. It's quite it's been a trendy brand in the last at least 5 years. But why did their unit sold grow that much? Why? Because there were big discounts over Prime Day with up to 60% off in June that made probably consumers aware of its availability on the platform. But they were also followed by beauty days in September, where customers could grab Urban Decay eyeshadow palette up to 40% of the price, which was very interesting. Secondly, Julep, so we talked about it before, observed the year-on-year growth of 316% year-on-year. Why? Because there's been a high consumer endorsement on the quality of its top-selling products, the creme to powder eyeshadow, with top beauty publishers such as LUSA on Vogue featuring it in their must-have makeup items. Can you go to the next slide, please? Lastly, the third fastest growing brand was Grande Cosmetics, whose unit sales grew by 221% year on year, which is quite impressive, knowing the fact that its average unit price range about $44, which is much more expensive than the average unit price for a makeup product on Amazon. So why was there that growth? Actually, some TikTokers posted their incredible results after using the product. So they posted the first, Alisha can tell you more about it. But they posted these results with a before and after video by making millions of impressions, which were then picked up by other TikTokers that also tried the product and influenced their network into buying it. So I think that's something we can really see the influence of TikTok for the success of Grande Cosmetics, but also for other high-end brands such as Anastasia Beverly Hills. Next slide, please. And I will take us to our final conclusion, the fact that TikTok's exposure can really boost Amazon sales for products from various subcategories. Looking at this range of different products that are from skincare category, makeup, hair care, and also shaving products, we can see a different scenario happening when brands try to increase their exposure on TikTok. And our finding was that out of these 10 products, 9 showed very solid evidence between TikTok viral exposure and increase in Amazon's revenue above category average, with an average growth rate of 85% month of month following a viral video. On this, I'm going to end, this is the end of my presentation. Thank you very much for listening to us, and let's move on to the Q&A.
Awesome. Thank you. Thank you all so much for joining. It looks like we have a couple of questions that have come through the Q&A. If you have anything else, feel free to put them in, and Ines and I are happy to answer. So the first one was asking that, or the question was, you mentioned that Amazon has a high rate of returning customers, retainment, loyalty, i.e. using retention strategies like subscribe and save. What can other competitors do to compete with Amazon? And I think that's a really interesting question. Obviously, Amazon is a bit of a mammoth, but I think that kind of trying to take from their playbook is probably one of the most important things you can do, right? So if you're able to build in some sort of subscription lever or something like that, I think that can really, really help improve purchase frequency, especially obviously if that's bundled with a discount. The other thing I would say is that if you know who your returning consumers are, really focusing on them and building out either a loyalty program or maybe emailing them after their most recent purchase with a coupon for something that they bought or a coupon for their next order could be something that really starts to increase engagement online. I know with Amazon's business, there's just been kind of a lot of things that they've done through subscribe and save, through working with existing consumers to really, really focus on that cohort. And I would say for any retailer out there at the moment in grocery, you want to continue focusing on those high value returning consumers and really treating them as your best consumers, right? It kind of reminds me of travel, where you have so many loyalty programs, and those consumers are kind of the ones that travel companies care the most about to a certain extent. I would definitely recommend implementing the same strategy for a retailer. And then our second question here was a bit more general. So I think Ines and I can both take turns on this one, but I can start it off. So the second question was, why couldn't other companies go big like Amazon? And I'm guessing that that's in reference to grocery and beauty and personal care. I will say that Amazon was probably one of the first digitally native e-commerce websites. They've obviously just grown massively over the past few decades. So a lot of that is just due to kind of timing, place, Jeff Bezos' strategy. But with grocery in particular, what I would say is that Amazon has put a lot of investment into their grocery business, right? So even though grocery may be at the outset, it may have been kind of a risky play, right? Since Walmart did own a significant amount of market share prior to the pandemic. What we've seen is that because Amazon was investing so heavily, they've really been able to kind of achieve a certain return on investment where they own that market share, and then the consumers that they're focusing on are bringing in the most revenue for them. So I would say for grocery, it's really just the fact that they had the funds to invest and that they invested so heavily, and that they've really been optimizing it throughout the pandemic. Ines, do you want to take that for beauty and personal care?
I was actually about to add something. I think one of the key success of like the factor of Amazon, so is both the amazing logistics network across the whole country, but combined with the very high level technological edge that has Amazon. So Amazon both have the physical capacities to handle very large network of logistics and delivering as fast as possible the orders, but also has a very, thanks to machine learning and their algorithm, they have a very good model to predict when, for example, when products will go out of stock, etc. And I think they really have this edge over retailers, traditional retailers. That will be my 2 cents.
Awesome. And then kind of continuing on with this Amazon trail, does the digital Amazon channel, whether grocery or personal care, influence the brick and mortar experience in store? So do you want to take that first, Ines? And then
yes. So obviously, especially, so I mentioned the fact, for example, that Sephora was about to offer same-day delivery, and even from their from when we order from a specific shop. So I do really think that actually, as a pioneer in the business, Amazon is influencing the in-store experience by bringing maybe more services and to in-store shopping and trying to make beneficiate in-store shopping clients from some of these most up-to-date technical edge.
Definitely. Yeah, I would say that there's a few different ways that we've seen the impacts in grocery, right? So just at the high level, what we've kind of spoken to is that we've seen just a drive away from in-store shopping and to online shopping, right? Now, that being said, I think that there's a lot of opportunities for cohesion, and kind of getting into the answer for this question. What we see with Amazon is that they're very savvy about implementing in-store pricing or deals at Whole Foods for their Prime customers, encouraging customers to pick up instead of getting delivery. So pickup is an option as well, which Walmart also has. Most major grocery retailers have. So what we see, I think, is that the digital Amazon channel does influence the brick and mortar experience in a variety of different ways. And for grocery, like I said, it has influenced it in that people are moving more online, but Amazon is still building out this ecosystem where you can kind of alternate between online and in-store. And then to Ines's point, I think there's similar synergies happening with beauty and personal care. But I think what we're seeing now with the resurgence of people going out more and maybe being more comfortable is people returning to beauty stores, maybe a little bit more than grocery stores. I don't know if you would agree, Ines, but I think grocery stores have traditionally just been a little bit more, I would say, for those who are hesitant to be in crowded spaces or things like that, a grocery store is probably a little bit more intimidating than a beauty store. So I think we're not quite seeing that return to brick and mortar in grocery that we may see a little bit more on the beauty side. Awesome. Well, it looks like we've taken care of the questions that have been put in the chat or the Q&A. If you have anything else, feel free to just pop it in. Or like I said earlier, you can always reach out to us directly. We're happy to answer any questions and go through any of the content that we went through today. We'll also have a recording of this sent out, and I hope you all enjoy your lunch too, as well, that came with this. So awesome. Well, thank you all so much. Have a great rest of the day, and we'll hope to connect with you soon.